Welcome to TradeTheMBI.com. This is John's Reporters for the 5th of March. And look at how convenient that was. I think the low comes to 67. Very close to that 62. We dipped just below the ABM briefly, right around, if we look at all the magenta stops, was at 67.50, which is exactly what the low was. And we bounced right off of that. It was pretty clean what was taking place. It corresponded with exactly where we were with the falling shakeout as we were getting a slight dip with the readings. We had the cyan clearly above, with steel from below was enough to give it a little bit of support. We would expect to see more fund money coming in, and so we would look for that steel to remain buoyant at this particular point. If it fails to do so, we fail to get those green back over, then we might be looking at a shakeout that continues to drop. We started with the upswing real quick, which led to the new highs and everything, and then it started dropping off yesterday, and still even lower, even though we have slightly increased price right now. It's less relevant than to express the weakness that we're seeing within the setup. However, the expectation would have been to see that steel cross coming up, and of course, if it moves above cyan, we've been bullish, and likewise if orange had continued lower. So, all in all, yes, we're holding up within these ranges, but we're still within what I would consider somewhat weaker overall position. NQ, so the NASDAQ looking much stronger, and that's obviously what's keeping things going up. It had the cross of the steel in that, but we can see in pre-market it's already faded below there, but cyan still is less than red, so still within that configuration. So that could be enough to keep the S&P floating. The slight downturn in the euro obviously also adding a little bit of pressure. Wasn't enough to cause a significant slide just yet, but that can change quickly. And gold continuing its retrace. We were looking for the dip below the red line right over here, those lows to be touched. And that's going to be somewhere down in the 120 range. It's important because it's an indication that the expectation of inflation is fading off very quickly. So some people are expecting things to turn south quickly. Turning to our 5K chart, it was quite an exciting one. So we had to go back to Friday's action. We had a series of positive extremes. Well, that took us all the way back over to playing with that line. It wasn't my intention. Just trying to click for the positive extremes right there, and boom. And that took us just above where the 93 algo we had from way back. Let's move this one back up here so it's out of our way. And I had projected that we were looking at somewhere around 28.20 if we go back to several days back when we were talking about the breakout of the highs. My expectation we would get somewhere around 28.20 is usually where the breakout goes to, and then you come back to retest the breakout level, and that's normal. I mean, we can go back to look at it from here. Right there, we broke out, didn't quite get, it's like 2015-ish range or whatever. What was the high on this one? 14. And that's usually what you look for when you're breaking those even numbers. And the 93 here being the algo retest, not out of the question. So from the Dealcon Paint 2 setup, we have the pivots, which are the P2, P3. The P3 just happens to be in the higher range. And then when you see the X2s, that's usually when you're getting your buy configuration where you have your steel cross above cyan, orange dipping below, that criteria. Similar thing happened over here when the gold took hold right at that particular point. And it dipped about 4 or 5 points from this level right here when that first came in. That was 92, and the low ended up being 87. Within that 6 to 8 that I usually recommend from a stop standpoint, which I know some people think that's a little high, but that's typically exactly what the deviation range is, just because they try to clear stops and sometimes it runs a little further than expected. In this particular case, when we had these, we had a very soft reading coming from those, and it was already almost overbought if you look at the yellow from the positive extreme. Anyway, we know we popped up, and the pre-market made that super move, of course, even all the way back to before it happened. The low right down here was right down the 2804 range. So when we started to get the short signal, sliding over, which came in very nice, DOC spread. It actually began a little bit earlier, but you still had right above the zero rising, and then finally when it started to fade was right about here. You had your first earliest inclinations right around between the 16 17 range. I was fortunate enough to get the 17, simply looking for the pop adding into it. And we kind of traded back and forth a little bit. We had the continued decay of the shakeout net, so when the dip below the red line really wasn't looking for all that much, still had to use the highs as the stop. And then it's just a waiting game. There was no real bounce from the DOC red, and we continued to make lower pivots. If this pivot had been taken out, then I would have been likely to expect new highs, but it did not. It started to roll over. And at that particular point, then you're just like, okay, nothing to do. Even though you had the bullish move of the steel going up, the orange remained caught between this cyan and red, which we look for. That's continuation. And you look for that continuation until you get that dip that goes below. And in this particular case, that just doesn't happen. Even though we got into the oversold, you start to worry about pops when you get to this depth. And this is where I talked about adjusting the stop. It was at the 50%, and then I started posting about making the adjustments from there down to 38 when we started to break the new lows. Once the new lows came in, like in these particular cases, you're making new lows, so there's no way you can achieve a buy under the configuration. Now the X came in on this flat one, but all you had was a dip of the orange below green, and in no case did you have green over cyan in this particular case, which is something I would be looking for, and with no reset of the steel. So normally with the steel being above cyan like this, you get bullish, but in this case, breaking above the plus 13.5 is effectively coming from lower, which would be great, but the problem is no way for it to express itself from a positive standpoint. You need a complete reset of that in order for it to become a bullish configuration. So even by the time we get down to these, again, we had the same situation with no orange support whatsoever, so you can't develop a buy within that. And then sliding over, we started to make some longer flattening of the 0%, and that's usually when you start to look for a basing effect. In this particular case, deep red, we end up getting the right configuration spread where you start to get that 2 and a quarter points of the yellow above red, except for really didn't produce much, and then got, well, positive extreme right there, pretty much below the 23%. It's not going to be enough now. At this particular point, you've already got that as a marker for effectively a return back, because what they've done here is they've shown that there's the potential to want to start to break that. So when the new lows come in, number one, I'm expecting this low to come back, and then two, I'm looking for a move that's going to get back up to here, but in this case with the falling 23%, I can wait for a break of the 23% that's on my rising shakeout and or rising red DOCs. So in this case, even if you were anxious to get into early trade, you can see the X's came in on this one, which was decent. The problem was, and it's interesting, when the red moves above negative 13.5 very quickly on that, they usually don't last and doesn't have quite the support. And that's exactly what happened with this. You don't know that that's going to happen beforehand, but I use it as a potential for covering and taking profits simply because the exposure for a decent run. If the green gets over cyan, that's usually net positive. The problem is the positive extreme on that. If it happened without that, then you would expect much more of a breakout. And then at this particular point, you end up with gold starting to rise, and you have to just wait for that cross of the yellow and the spread being greater than your 2 in this particular case. 1486 was the magenta and 10, so that's 4 at that particular point. Here, they were pretty much under a point. So got everything I wanted here with the break of the 23% as well as the proper crossover and rising gold and rising Azure in this case. They kind of met right here, so I was thinking, okay, well, we got to see what happens with our DOC red, but it was just straight upline trek. And once it broke 0, that became the critical function, because at that point I'm looking for any break that's going to move back below 0. So we ended up getting these BKs where you get the DOC spread. Problem with it is full reset of steel. Not going to do anything with that. And red continuing to be above that 0 line would be premature in this particular case to go after, especially with the continued rising gold setup. So then it resets itself right here in this flat zone and starts back up again with the rising shakeout. So now at that particular point, I'm starting to think, okay, maybe I can find a situation, because I'm starting to make lower shakeouts on higher highs. And as these little DOCs present themselves, they become opportunities to take shorts whenever you're up near towards the highs. Ideally, I'm looking for that steel, though, to be well above, simply because with it coming from below, it's always going to be providing support. So the cleanest point came right here where you started to have the breakdown, which is that classic short snake. You've got orange having crossed green all at the same time. The problem with this, rising red and the green not below red. So it takes a couple more bars before that happens. And it happens, guess what, right at the 2783 critical pivot point. Interestingly enough, as much as it was a decent setup, I mean, you drop all the way down to 85 in this particular case. Again, that's steel crossing red, it's a warning right there, and then just a couple of bars, boom, pretty much right around 89, so less than the 93, but right about there you get your turnaround point with the bullish, and that's where we're at right now. So plain and simple. And in fact, we're just developing a short snake construct right now. Only difference is, look at that straight vertical for red. You'd want to see that to begin to roll over a bit before you could assume that it's going to fade some. But it's quite interesting with that setup, because it was beautiful watching a break of all that and then just continuing to follow it down below, and then it was just a matter of taking at the bottom. I had a terrible time with my Skype. The thing seems to freeze up periodically, and it takes me forever to try and get it back on, so I wasn't able to get back to post about it, but at least we knew where we were looking for with that break of the 2793, and then it kept going down. It was just a matter of waiting to see if it was going to base at all. So I started trailing at the 38%, and then as we got some of these more clean signals, I was starting to get a little bit tighter with it, expecting that we would start to see a break, and it just kept cascading lower. There was no objection to it, but certainly gave us that nice turnaround move right at the close in this bar, and that was all the way up at the 75 range. But still, from 28.17 to that, pretty decent. Interestingly enough, we look at the 50K where the Diacon Paint 2 originally set up for. This is exactly the kind of setup. So within that short configuration, boom, there it is. And what that's looking at is it sees the crossover with the significant move of the shakeout with the yellow crossing the magenta right there, produces the buy configuration, and actually it's set up to actually buy at that particular spot, and that's that momentum play, particularly when you have that green over sign, and worked out beautifully. So that's exactly what that's intended to do, and did it perfectly. So that's what we look for in those kind of situations as that develops. So as always, I will continue to put up anything that's relevant and keep following along. This one was a fantastic one to start the month. Worked out perfectly, and there was just plenty of situations where you could enter it all the way through. Don't want to run too long here, but that was worth going over some of those details. As always, though, trade well. We'll talk to you later.